Welcome to TradeTheMBI.com. This is John's reports for the 20th of February. Yesterday saw a push towards that block right here of the highs, so we've faded off a little bit from it, but that's been the pressure point we expected to get here with the magenta still riding high above MBI yellow. It's still a straight line here from a DOC standpoint too, as far as orange now, just slightly ahead of cyan. So that is a significant improvement, moving it out of the zone of being caught in continuation. So we're sort of breaking out from that. Short-term buyers still not having reset anything positive from that standpoint. Just a slow, steady climb of midterm buyers. You can see shakeout making its subtle improvement, but it's in a scary spot here because if you dip lower, you're definitely going to have a pullback, but there's certainly plenty of range for it to break out to the highs. And of course, you see, on the world scene, potential pieces breaking out. But the real question is going to become, and people are going to start to pay more attention to, is the budget and whether or not the U.S. is going to be making significant cuts into that budget, because the way we've been accounting for things, most of GDP growth, and that comes from the fact the government's been spending extraordinary amounts of money. Now, my argument has always been that that's not a problem to cut if you get rid of waste and actually move it toward productive means. Will we get to there? The talk about the savings from Doge or whatever being sent to individuals, that would definitely be a boost in the interim while we wait for things to settle out, at least from oil and other things, because there's been no improvement on that front. From a NASDAQ standpoint, just a little bit softer right in between there. But you definitely have those crossovers, and now the steel dipping below. So you may see a little more weakness from the NASDAQ that kind of keeps the ES from pushing forward. Rates, of course, nowhere, nothing happening. The Fed is sort of sidelined at this particular stage, not doing anything. But again, we still have the problem of oil. Until that changes, there's not much relief in sight. Now the question will be, as we start to get better control from what the numbers are going to be, how much adjustment will there be in some of those numbers coming from last year, and how material an impact will that have from market players? Could be significant, but they're all going to just blame it on Trump anyway, so there's not going to make any difference. From a euro standpoint, though, they're in an interesting spot here, because now you're in a situation they're forced to have to defend themselves, at least for the idea of wanting to maintain war, because clearly Trump's not going there. Putin's happy to go with peace. So the EU's stuck with having to spend an awful lot of money to try and salvage the Ukraine situation. And how that benefits them from a euro standpoint, I have no idea, because I just don't see it happening, not to mention the stresses they're already under from poor growth. And you can see the view is that inflation is going to continue to skyrocket here, and gold is getting very close to just breaking that 3,000 barrier, and it should continue from there. There's no abatement in sight, at least as far as I can see. That's going to lead to, like I said, a slow catch up from crypto in there, now that gold is finally relatively caught up from a speed standpoint to where the early move in crypto was. It leaves room for crypto to start coming back from the brink, so to speak. And from an ETH standpoint, similar situation there, nothing special. So we ended up with holding on to the support zone here at the 61% level from a Morganacci standpoint, fading below it right there. But there's that rising DOC zero, and right now it's getting close to where that positive extreme was from back here. It actually has exceeded it already. So you'd have to have a pretty significant sell factor take place in order for that to happen. Now we are in a DOC spread, which is obviously showing itself in that broad weakness right now, but full reset of the DOC steel, so 50% is likely to hold in that case. And from an intraday standpoint, you can see it was mostly up and through there. And then now, of course, in the European session, a bit of a fade taking place at this particular point. They're starting to try and build it up here as we get closer to where the open will be. But neutered is the best way to describe it, and that's what we expected from the action in the short term. But it looks like there's a potential for things to pop up, particularly as we get towards the end of the month, and then you have to start figuring out where's the track on things. And with no movement in oil, I just think it's going to be more of the same until something breaks there, or we get some kind of readings that indicate that something significant has to happen from the Fed. We'll take it as we get it, reading by reading. As always, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.